So the Hang Seng is seeing the biggest cut right now. That's down a full 1.5%.
Needs to close above the 20-day moving average. We almost got to it. It's moved up. The average has also moved up a little bit. It stands at 19,639.
Revenue is up 41% on a year-on-year basis. Margins have come in at 24%, but the street was anticipating 22%.
Up about 30-odd points. The sensex is up about 76 points as well.
We believe that the confidence in terms of reaching those mid-teen kind of earnings growth for the next 2 years on the Nifty basket is definitely quite higher.
There's something I don't focus on is margins. What I look at is absolute value, which is EBITDA per bed or EBITDA.
They say that the option of acquiring SMG shares by an issue of Maruti equity shares to SMC would be beneficial to minority shareholders.
If you take cues from Q1 and how we performed against the fiscal year target, so I'm pretty confident that we will beat the guidance that we gave.
I believe that we can continue the loan growth journey. The reason being, this is a very unique quarter.
The market's in the red now for all the benchmark indices.
It's yet another nation-building project that anybody would want to participate in.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. And we're coming to you from the CNBC-TV18 Motilal Studios. I'm Prashant Rima, and Nigel joined me here over the next 60 minutes. And Surabhi will be with us as well in a bit from now. It's quiet, it's slow, it's kind of almost slow burn in many ways than one. Not very much happening. Right from the word go, it's been that way. I mean, so it's what you got nothing. I mean, flitting between positive and negative. 19,587 is what we have. Very sideways kind of day. Advance decline is 1:1. Actually, I think declines outnumber advances just by a little bit. So keep an eye out on that one. Nifty Bank did nothing yesterday, even as the Nifty was moving up. Today as well, there is not very much going on, although that index is up a little bit. Mid caps and the small cap indices are doing quite all right. So that's the broader picture. Now the Nifty needs to have a close above the 19,640 level broadly. That's the 20-day moving average. And the Nifty Bank, the 20-day on the Nifty Bank also comes in at about 45,356. Those are the two broad numbers you need to watch out for. It's 50 points away on the Nifty. It's about 1% away on the Nifty Bank. A close above it brings in a lot more confidence about directionally which way the market is headed. Rima.
Hi, so talking about a quiet day, the Nifty's moved in just a 100-point range today. It's been that kind of a day. And again, underscoring the importance of that 20-day moving average. Today, the intraday high on the Nifty was 19,634. Very close to its 20-day moving average. We went to that level and then we have reversed. So similar thing happened in yesterday's trade when the markets went to the 20-day moving average and came down, and it's happened today. The good thing is that the banks have outperformed today. Up until now, over the last couple of days, the banks were underperforming. But today, the Nifty Banking Index is up. That's higher by close to about 0.4%. And we've got the Fin Nifty expiry today. And names like ICICI Bank, Axis Bank, even PSU banks have bounced back. So in fact, the Nifty PSU Banking Index is a gain of more than about 2.5% right now. And in terms of individual movers, it's Hero MotoCorp, which catches your attention on the way up. So that's higher by close to about 3.8%. State Bank SBI Life is suddenly shot up, and that's seeing buying. Adani Ports pull up an intraday chart and post the numbers. You are seeing some pickup in the stock. It's gained close to about 1.5%. But Surabhi looks like at least ahead of till the policy is out of the way and we have clarity, things could be on the quieter side.
Well, that's how it looks like. And we've had some interesting news points in the international markets as well, right? The Chinese numbers that we got, for instance, the trade numbers, they sent a bit of a wobble across the neighborhood because the export-import data was very weak out of China for the month of July. Exports, if I remember correctly, tumbling as much as 14.5% more than anticipation. Imports falling by about 12%. So that kind of weighed on the overall Asian setup as well. In that context, it's probably not too bad that we're trying to fight up. Just some stocks, actually tier 2 financials beyond the index, they're also having a pretty good run today. Look at some names. Look at a Bank of Maharashtra, a J&K Bank, Amannapuram. These are stocks which are up between 4, 5, 6%. So some interesting trends coming out of the mid-cap market. Throw in an Equita small finance bank as well. Poonawalla FinCorp has been on a tear last couple of days. This month itself, it's up around some 10-12% or so. So big moves coming in on a couple of these financial names. And then there's something like a Gland Pharma, which has been absolutely on fire from the word go, thanks to those first quarter numbers. Still 20% circuit, by the way, on Gland. So not looking bad. I guess for the time being, I mean, flat would be good, Nigel, on the headline index.
Yeah, I don't know what you guys are talking about, a flat market. Take a look at the Nifty Financial Services Index. Well, that's moved to the high point of the day, and that's where all the action's going to be, right? For the last 60 minutes, since it's a Tuesday, Nifty Financial Services Index, that's bucking the trend today. We are seeing some kind of writing at around the 20,000 put. I had pointed this out earlier as well today, that maybe the financials and Nifty Bank, after, some of these banking names, after having a spell of underperformance, well, maybe they're set to see a bit of a bounce up. So writing at around the 20,000 put, the premium is down close to 90%. So that lower level of today, that's 20,115 odd, that should hold out. The question is, how much higher can we go? Because in the last 30 minutes or so, well, the Nifty Financial Services Index, as it is, it was doing a relative outperformance, but now it's moved to the high point of the day. And you'll be highlighting a couple of these insurance names. Now they're not part of the Nifty Bank, but they're part of the Nifty Financial Services Index. And some of them are playing their role perfectly today. Can we get closer to around the 20,200 odd mark? That's going to be an important mark. I think 20,150 first, that's going to be a bit of a resistance zone. And then we move to around 20,200. But that's about the Nifty Financial Services Index. How do you position yourself, though, for the final hour of trade? Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. Well, one index that's doing pretty well is the Nifty Financial Services Index. If you're looking at any levels on that one, and what does it mean for the Nifty?
The Nifty Financial Services Index, Nigel, unfortunately, so I think there's expiry, but we typically do follow the large indices like the Bank Nifty, Nifty IT, etc. So I missed this one. But I think on the indices, I maintain that this is a no trade kind of a zone. At higher levels, I would want to sell into the Nifty around 19,650, 680. So waiting for that. But till then, trading is more stock specific. I think PI industry is something which has picked up good momentum. So that's a buy with a stop below 3,800 and a target of around 3,950 can be looked at. The other one, which is PSU Bank, which could be part of the financial index, I have not checked it out, but PNB looks like catching some momentum. Buy here with the stop at 61 for targets of around 66.
Okay, thank you very much for that. Let's move on to a CNBC TV18 exclusive now. Abhishek is standing by with the latest details on the deal between the promoter Vijay Shekhar Sharma and Antfin on the Paytm stake sale.
Well, as we all know that, Antfin has transferred some of its shares into OCD in Paytm via, the overseas subsidiary owned by Vijay Shekhar Sharma. Now, sources do tell us that there is no assured return guarantee to Antfin in the past or as part of the, optional convertible debentures agreement. So, there is no fixed return that will be given to Antfin. This is probably India's biggest buy now, pay later kind of a deal. There is wrong to say that there will not be any cash outgo. There is equity transfer, so payment will have to be made in a future date. So there is long committed OCDs running into many, many years. There's no definitive number of years that's been given to Antfin, and this brings Antfin into shooting distance of about 10%, close to about 13.5% that they will hold post this deal, but nothing on the anvil or near term with respect to after that stake. Back to you.
Okay, all right, Abhishek, thanks a lot for joining in and giving us those big details that you're picking up on Paytm. I think we have Dipan Mehta who's joining in as well. Dipan, you want to come in for a quick comment on this?
Yeah, good afternoon, Nigel. On Paytm, is it? You want my comment? Hello?
Yes, Dipan. What's the view on Paytm from here?
I think Paytm has done pretty well last few quarters or so. You are seeing that they are going on the path towards profitability. The investor communication is great, and the fact that the promoter is increasing his stake certainly inspires confidence. But yes, of course, it's a long way where it gets solidly profitable, and we can start valuing it based on traditional multiples or any other traditional forms of valuation. But for the time being, I think if you invest in Paytm, it has to be kind of a leap of faith on the business model. So from that point of view, I think it's a very difficult decision to make. But I think it's gradually moving on a perfect roadmap, and it is playing to what the street is expecting the company to deliver. And it's a company you need to keep under a watch because it can always spring a rabbit out of the hat. But at the present valuations and considering the risk-return profile, I would not like to put fresh money in Paytm.
Okay, got it. All right, Dipan, let's move on then. In the last 1 hour or so, we had numbers coming in from Hindalco. And Hindalco's numbers actually operationally were better than expected. Focusing on the aluminium business first, there was a contraction on a year-on-year basis, but not as much as expected. The aluminium business, the total EBITDA out there was more than 2,000 crores. That was much better than what Kotak was estimating of closer to under 1,700 crores. And the upstream business, there was some contraction, but the downstream business, which is relatively smaller, in fact, it increased. The EBITDA increased by closer to around 30 crores. And on an EBITDA per ton basis as well, it moved up by more than $60 on a per ton basis. So the aluminium business, well, that beat what the street was working with. Next up, the copper business. Out there, the EBITDA came in lower by only around 6%. Now, the street was bracing for a far lower number on the EBITDA front for the copper business. The copper cathode production, well, that was down big time because we know there was a maintenance shutdown. However, the sales volumes, in fact, were higher. So it appears they were sitting on some inventory. And that's why, in fact, the sales volumes didn't really get hit. And the EBITDA for the copper business, well, that as well beat street estimates. So both the two aspects from the India business, the copper business and the aluminium business EBITDA, both of them were better. The net debt on expected lines moved a little bit higher because of capex and some stretching in terms of working capital, but that's on expected lines. All in all, the operational numbers look better than what the street was working with. Well, Dipan, on Hindalco, what's the view? The numbers are looking good. Novelis as well was recovering. The global environment is a bit of, a headwind, but otherwise things are looking up. Your view?
You're right, Nigel. I think, while domestically demand is holding up well, prices are decent, but large part of Hindalco's revenues come from overseas, and still there's a bit of a muddle over there. And also, it's not available at a deep discount that, it provides a lot of margin of safety for an investor to consider Hindalco. And there are so many choices in the commodity consumers. I think this earnings season has thrown up so many opportunities on the banking side, automobiles, engineering, construction, real estate, FMCG stocks, even pharmaceuticals, which were laggards, now are coming back pretty strong. So when I look at the entire spectrum of choices available to me, and I compare a Hindalco or a cement companies or any metal companies, I don't find them attractive compared to what I'm getting elsewhere, where there's a high degree of visibility, valuation, comfort, and a good runway for growth.
Okay, got it. Dipan, good afternoon. Just coming to you on Gland Pharma, but hear it from Ekta, who's joining us to tell us what's driving this 20% move on Gland. It's a comprehensive take. Ekta, take it away.
Thanks for that. Well, yes, Gland Pharma has seen quite a significant rally in today's trading session because of the Q1 recovery that they have shown. So revenue has grown around 41%. They have an EBITDA which has improved all the way to levels of 24%. The street was anticipating around 21%. On an adjusted basis, the margins have done better as well. And the profit has come in at over 190 odd crores as well, much better than what the street was anticipating. Now, you have to look at Gland in terms of the context of the recovery as well, because in the past many quarters, Gland has in fact reported very weak numbers. This weakness really started in the second half of FY22, where it was plagued by issues such as supply chain disruptions, price erosion in the US markets, COVID-19 opportunities dwindling. Now, that had resulted in the weakness that we saw in numbers, which really hit a trough in Q4, where the margins came in at around 21%. The profits were sub 100 crores. So they had faced multiple issues as well at, during the Q4 time, which were one-offs as well. So we have seen a recovery come through from those levels. But if you look at it in terms of a stock performance, today we've seen the stock rally around 20-odd%. It has rallied significantly from 52-week lows of over 860-odd rupees, but it is still around 35% away from its 52-week high, and it is quite a distance away from those highs of over 4,200-odd rupees, which it had hit in August of 2021. Now, in terms of valuations as well, it is currently trading at around 23 to 24 times 1 year forward. But if you look at it in terms of peak valuations, at one point in time, it was over 45 times. So for it to get back to those valuations, the street says that, maybe there needs to be some amount of sustainability in terms of the numbers, and the next couple of quarters will be key to track that sustainability for Gland.
All right. Ekta, thanks very much for that. Deepan, you heard it from Ekta. What's the call on the stock?
Yeah, I think she covered it very well. But all I can say is that, it has really been a big disappointment as investor of Gland Pharma as a measure of disclosure. And clearly the company has not lived up to its potential. We thought the business had high moat and clearly a differentiated kind of offering in the US market. But the way the competitive pressure has hit Gland Pharma also, that's been quite disappointing. So while I feel next few quarters, of course, the company will do well. Base effect also will help certainly. And overall operating environment also has improved. But we cannot expect investors to pay a premium multiple for Gland Pharma. And that's where I think the issues will come up. So I'm not certain that this is a great price to buy from a long-term perspective. But yes, I think next 2-3 quarters may look very good. And you could still have a 25% type of a trading rally in Gland Pharma if the numbers continue to show as they have. But from a longer-term perspective, I'm more positive on some of the other pharmaceutical companies, especially something like a Mankind Pharma. Their numbers also were exceptionally good, or even Cipla for that matter. I think, I would say that those may offer a better risk-return profile and better return opportunity than Mankind Pharma. But make no mistake, there is certainly a strong trading rally underway, and there's momentum behind the stock. So that could first take Gland Pharma a little bit higher from these levels as well.
Okay, that's the call from Gland. A blowout performance in the first quarter. The market probably is hoping that it's going to sustain. Okay, on that note, let's actually turn the spotlight back on some of the nifty stocks which are up and about. And Hero Motor continues to be in pole position, 3.5% up on that stock. Now, Hero, by the way, is still behind. I mean, though the winnings this year are around 11-12%, they pale in comparison if you look at it versus, let's say, a Bajaj Auto, which is up around 23 to 24% this year. That's Hero, up about 12% this year. Bajaj has done a lot better in the same space. Deepan, hi, good afternoon. So I think today the excitement is about this 25,000 number, right? When Hero said that they've already got bookings for their new Harley bikes, 25,000 bookings. I think that got the market excited. But how would you look at the stock? It's an underperformer compared to Bajaj, like I said. There's also been this overhang about some of those regulatory issues with respect to the promoter family. Would it make the cut for you? What would you do with the bike makers? Because we don't know who's stealing the thunder, so to speak, in the premium segment just yet.
Yeah, good afternoon, Surabhi. Just look at Aisha's numbers and you'll have your answer. It's been our favorite stock. We've discussed it many times on the channel, the disclosure over here. We and our clients are invested. And, while we may be celebrating that Hero's got 25,000 booking, that doesn't really translate a lot in terms of market share gain, or it's not going to move the needle too much for Hero MotoCorp as well. The fact does remain that there is intense competition in the commuter space. At the same time, they are facing the threat from EVs. Last I checked, there were 110 new models coming in the two-wheeler EV space over the next 6 months or so. Some of them from existing players and a lot of new private equity-backed players also coming on scene over there. So there's going to be a lot of disruption on the two-wheeler side, especially the commuter side. And that, of course, I think one needs to consider when investing in Hero MotoCorp. And I think over the years, the disappointment over the kind of stagnant numbers which have come through also plays on over here. So I would still like to avoid Hero MotoCorp and place my bets more on Eicher. I think they may be the least impacted by the electrification taking place within the transportation sector, purely because it's a lifestyle product. I mean, it's more of, it captures the imagination of the average user. And it's got a whole brand and a kind of a, strategy behind how to keep their users locked in. So I like that business model. And I do feel that they can grow at 15-20% over the next several years on a secular basis. And Eicher Motors hasn't even scratched the surface when it comes to exports. Whereas Hero MotoCorp will keep on struggling with intense competition in the commuter space. So that's how I see both these companies.
You know what I read recently? That Eicher Motors hardly spends anything on advertising. a very minuscule amount, because most of the advertising used to be done in movies where the hero would always come to meet his, the heroine in a Royal Enfield. And that's how the cult of, the Royal Enfield developed, without the company having to, spend too much on advertising. But you know what, Dipan, we'll get into a break on that note. We'll come back and chat more with you. We'll also invite Rajesh Kothari of Alf Accurate Advisors on the other side. Welcome back. ITD cementation is the stock on our radar. It's surging on the back of its Q1 numbers. Vivek joins in to tell us more. Vivek?
Well, that's right. Very good operational quarter from ITD Cementation as far as Q1 is concerned. Good execution trends aiding the top line. So, revenues jumped up almost 67% on a year-on-year basis, coming in over the 1,830 crore mark. Now, also, EBITDA jumped up almost 80%, telling about the effectiveness as far as cost controls are concerned. And on the back of that, margins too, saw an increase of over 60 basis points on a year-on-year basis. Profitability higher by 73%, both year-on-year as well as sequentially. There has been a significant improvement in all of the parameters as far as ITD Cementation is concerned. Along with that, the consolidated order book too stands quite strong. Over 18,500 crores, the order book that the company is currently sitting on. And in Q1 itself, the company secured orders of over 247 crore. In fact, looking at the P&L, the PAT would have been even higher if not for the increased higher interest as well as depreciation costs. So very strong operational quarter, which explains the kind of up move that you're seeing in stock today.
Thank you very much for that. Dipan, do you look at ITD cementation?
Yeah, absolutely, quite closely. And just a disclosure that we and our clients are invested and very pleased with the stock price performance and the company's performance over the last several quarters or so. Truly, it's been a multi-bagger stock. And it's not surprising. I think the way the capex cycle has picked up and the amount of opportunity which is there in infrastructure projects, I'm not surprised ITD has reported these kind of numbers. It's sitting on a massive order book position, which is only growing year on year after year because of the new metro projects or the water projects or other such infra projects. And mind you, we are entering into an election year. So that also would mean higher spending to complete these infrastructure projects or to have more of these on the road per se. So I think valuations are fair, but if you want a quality player on the EPC side, then certainly ITD cementation fits that criteria. So we're very positive on the stock, but I would just say that maybe on a correction, if you buy, you may have some amount of margin of safety.
Okay, all right. Dipan, stay with us. I recall, when I had visited their office as well on our special show, Inside Out, you were quite bullish on it. I think the stock was 130 rupees odd. So from there as well, it's up close to around 50%. And you had mentioned at that time that you and your clients could be holding positions in this one. Well, let's talk about BHEL though. The stock has recovered despite a weak showing in the first quarter. Vivek is here to tell us about a bull versus bear scenario. Well, Vivek, what are the brokerages saying?
Well, absolutely. So what's actually happened as far as BHEL is concerned is that operationally, any way you look at it, Q1 was an operationally muted quarter. However, today the stock has recovered quite sharply. And what we, are looking at, especially in terms of what's actually working for the company, number one, the bull case, what you could look at, the company is actually mentioned that seeing increased opportunities incrementally, from various other segments, including power, nuclear, coal gasification, hydrogen, defense, as well as railways. So, the kind of segment that the company is looking at is quite varied. And along with that, the order book continues to remain very strong. Order book well in excess of over 1 lakh crore. Thermal ordering activity continues, and this is in line with the energy security theme that the Power Minister has clearly said. And lastly, two important orders which are in the pipeline. The company has mentioned that it is favorably placed. This is both the 800 megawatt Singareni order as well as NTPC's Lara project that the company could get. But on the other hand, there are a lot of issues plaguing the company. Number one, execution continues to remain a challenge. Order inflow, especially in Q1, was largely limited to the Vande Bharat order. So, on the back of that, this lumpy order made the order book quite bloated. Along with that, gross margin pressure continues to reflect, and the path to profitability as far as BHEL is concerned continues to remain quite unclear. Most of the brokerages, in fact, are quite negative. Kotak institution has a sell stance. The target price is just 41 rupees a share. They are saying that, weak starting margin as well as price aggression as far as bidding is concerned is one particular concern. Goldman Sachs too has a sell stance. Target for them is just 38 rupees a share. They're saying lack of opportunities incrementally in the thermal space. And lastly, Haitong, they've maintained an underperformed stance. Target is 63, and they've gone ahead and cut estimates quite significantly by almost 17% for FY24.
Okay, got that. So this is a perfect fight between the bulls and the bears. Thanks for putting both the views out for us, Vivek. Deepan, so where would you stand on the BHEL debate? I was just looking at the stock price. The stock in the last 1 year has rallied 90%, and that seems a lot for a company like BHEL. But then I went back in history to remind myself that the 2007 high, by the way, on BHEL was 360 rupees, little higher than 360. That was the heydays of the infrastructure boom back then. And I don't know if it's getting to 360 or not, but short question, Deepan, what would you do now? Buy, sell, or avoid?
Can I pass this question on BHEL? Like I used to study it when it was at 360 rupees or so, and then it went corrected almost 80-90% of its value, and it just lost our coverage completely. And now, of course, it's come back quite strongly. But, my preference is for the private sector players. And I think that there's better execution over there. There's better scope for secular growth momentum over there. And even the areas that BHEL is trying to cater to, the thermal power, there'll always be resistance from the ESG side. And more power generation is happening through through wind power and through renewable resources. So that does put BHEL at a disadvantage. And it's not that the stock is available at a throwaway valuation. It's rallied also considerably over the last few months or so. So I would, I would give it a pass at this point of time, although I'm quite impressed with the order book build-up.
Got it. Thanks very much, Deepan. Appreciate you joining in, and it's a pleasure having you here, as always. Rajesh Kothari is now joining us, Managing Director at Alpha Accurate Advisors. Rajesh, good afternoon. Good to have you with us here on the program, as always. Thanks very much. Now, I think some 80-85% of earnings have come through. Could you tell us which pockets you've been most surprised in a positive way and which pockets you've been most disappointed with? One common complaint has been consumer, which continues to hurt. A majority of consumer companies, I think, have more or less disappointed, not just discretionary or staples, but even other kinds. Your thoughts?
Well, you're right. So probably 80% of the universe has already declared their numbers. And overall basis, if you ask me, the results have been, I would say, is a net positive surprise in terms of the upgrades to downgrade ratio. If you look at it, then I think it is a net upgrade this quarter again. And this has been probably the 6th consecutive quarter where we are seeing the upgrades, that number is higher than the downgrades. So overall is a reasonably good, solid quarter for corporate India. In terms of disappointment, clearly IT is a disappointment. The information technology software has been disappointing. And in terms of the positive surprise, I think pharma wins that. So healthcare and pharma, that space has done extremely well in terms of the positive surprise. In terms of the consumer, I think, this is not what I would say, it's not a major, I would say it's more like a neutral, because many companies within consumer, now they are getting benefit of the lower raw material prices. So if you remember our last conversation, I said from this quarter onwards, from 1Q, it will start and it will continue for 2Q and 3Q as well. The raw material prices will be in their favor, which will result into gross margins increasing. At the same time, the rural recovery has also now started improving. So if you look at the most FMCG companies' commentary, I think they are showing a little bit more positive compared to what they used to be when it talks about the rural India. So I think from here on, if you ask my personal view, I think that space should do reasonably well, both on demand front as well as on the margins front. So I think we remain positive on consumer space. Of course, one needs to do then a little bit bottom up within consumer. But overall, reasonably good numbers from corporate India. Banking has been very good numbers. Corporate credit growth numbers are also very strong. The retail credit growth is also reasonably good. The pressure on net interest margins, which everybody was thinking as a major negative, at least it is getting offset by better control on operating cost, higher net interest income growth, higher advances growth, and lower credit cost. So banking numbers are also, by and large, I would say, is a more towards the positive compared to what Street was expecting.
But there have been quite a few downgrades in the banking names, whether it's even some of the private sector banks. So compared to the expectation, the hype going into the earnings, it's not quite played out to that. Won't you say that?
No, I don't think so. Look at, I think very important, when you look at the banking results, first, please look at the overall advance growth, the credit growth. And of course, one cannot compare QOQ. Everything is YOY. And I think on YOY basis, most banks have done reasonably well. Maybe one or two banks have done 1 or 2% lower than the Street estimates. But otherwise, by and large, they are in line. As I'm saying, the pressure on NIM is not that high because it is getting offset by the tight control on cost. And of course, the credit cost. That is also contained. And therefore, I think if you ask my personal view, I think banking has done reasonably well. NBFC also done reasonably well. Most NBFC companies, I think the stock price is also rewarded handsomely in last 2-3 months. So even NBFC playing out well compared to within that, as I said last time, we discussed at length that why we like NBFC over banks within banking and finance. So that thing is also playing out as per our expectations.
Okay, got that. Rajesh, pharma has had a phenomenal earnings season, right? Most companies have reported very smart growth, good prospects in the US market, whether it was Cipla, Lupin, Gland Pharma today. What do you make of this space, and how are you going about your stock selection? Do you like the pharma space?
Yeah, we have increased the weightage in pharma in last 2-3 months. We have been adding up to the pharma names. We probably also discussed with you that we are more bottom up within pharma. But of course, now what is happening is entire top-down is also working for pharma, which is a good thing for the sector in general. Clearly, what has happened in pharma is the issue which was a major problem last year, same issue is now becoming a positive surprise for the pharma companies. So last year, offtakes was lower, resulting into the inventory losses. This time, there is a shortage of basic drugs. I'm talking about basics. I'm not talking about advanced formulations. I'm talking about the basic formulations. And that is resulting into the significantly higher offtake, a better demand growth, little bit better pricing power, because many large companies globally, that list is reducing because of the increased competition. So there are a number of players which are going out from the industry or shutting down plants or reducing or rationalizing their product portfolio. And all this thing is resulting into the better margins for Indian pharma companies. So which is a good news. But of course, one need to be a little bit cautious in the sense that how long it can continue. Is it a 2-quarter story or is it a 2-year story? And that only time would say. So we are really more bottom up within pharma. We own few names in our portfolio in pharma space. And, I think they should do reasonably well because domestic pharma growth is also doing well. US is also adding to, the both revenue side as well as on margin side. And the bulk of the capex, the R&D capex or compliance capex or those legal costs, they are not going to go up in the same proportion. So net, the better earnings growth is going to be there for the pharma sector in general.
Okay, all right. That's the word on the pharma space. Rajesh, the other takeaway from the earnings season is improved profitability for some of these new age companies as well. I mean, Zomato, for instance, is a case in point. PB Fintech's numbers, I mean, at least at the surface looked okay. How are you positioned on this space? Have you been, taking any exposure to whether it's a Nykaa, Zomato, or some of these new names?
Yeah, I mean, so, for us, we always evaluate every opportunity and we have one of the company please put a disclaimer because now we are going stock specific. The PB Fintech, that's the name what we own from last almost, I would say, close to 1 year or so. I think, the targets for the managements across all this new age business has moved from, revenue to profitability. And that's good news for listed equity investors because that's what we always look forward. And the good news is that, that is now resulting into execution. So one is your target, second is your execution, and third is the final delivery. And I think on all these three fronts, number of companies within this space have delivered reasonably better numbers compared to overall street estimates. And we hope that that trend continues as there is a winter in terms of the venture capital raising money and funding the losses. As that appetite reduces, I think this trend probably will continue for some more time till the time that the risk appetite comes back to the previous levels. I hope it doesn't come back like that because at the end of the day, nobody makes money. Yes, so we are selectively positive. We own one of the name, as I mentioned, and we believe that it's basically business where the annuity profit is an annuity business, and over a period of 2, 3, 4 years, it can be huge, profitable business without the risk of the mainline insurance business in terms of the balance sheet. So you don't need that kind of a balance sheet of insurance play, but you can get actually entire benefit of the insurance tailwinds, the penetration, the digitalization through that name. So that's the reason why we own one of these names.
Okay, we'll leave it there. Thanks very much, Rajesh. It's a pleasure, as always, having you with us here on CNBC-TV18. Thanks indeed. Well, we'll take a quick commercial break as well. And with news that not very much new is really going on, we're around 20 points. We'll come back and we'll tell you what's happening in dealing rooms, some stock-specific chat with Nimesh. And we'll tell you what to buy or sell today for a reverse trade tomorrow. So BDST trades with our technical experts. Stay with us.
Welcome back to Closing Bell. Well, as we speak, the Nifty Financial Services Index, that's moving around a little bit. It went to a high of around 20,120. And from there, it's come off close to around 40-50 points. But Nimesh is with us to tell us what's going on in D Street Chatter. Nimesh, what are you picking up?
Hi, Nigel. In a quiet day of trade, a bit of consolidation at these levels. You pointed out about the Nifty Bank. Intraday was up 0.5%, but that's given up as well. And I believe even for the second day running now, there is selling pressure in select private bank stocks. That's overall feedback as far as flows are concerned. In terms of sectors, clearly the two sectors that stands out is autos and pharma. Pharma seems to be in a bull market of its own. Big buying interest coming back. And there is constant buying as well from the larger institutions. And not only the large cap pharma names, but now it's spilled down to the second rank and third rank pharma names as well. So that's overall feedback. I guess from a event point of view, the RBI policy later this week will be a big trigger to watch out for. The street is expecting a status quo, and I believe that's the reason why some bit of traction is back in the PSU bank stocks today. So that's a big macro event to watch out for. But also remember, on Friday there is the MSCI announcement which will come, rebalancing which will come, and that will be a liquidity event to track. So net, the flows are quite active. The institutional activity is quite high. But today it looks like a video of consolidation at these levels.
All right, Nimesh, but plenty of stocks buzzing around in the broader market. So what are you picking up in stock specific?
Well, a lot of stocks which are buzzing into it, as you rightly pointed out. A couple of stocks on my list today are stocks where there were large blocks in the second half of today's trading. So the first one is Minda Corp. 5% equity has changed hands today. The stock is under pressure. And I believe a large private equity investor was a seller in today's block. And in terms of buyers, a couple of domestic mutual funds and few insurance companies were buyers. So the disclosures could be important, but looks to me like it's a clean out trade in Minda Corp from a large private equity guy. So that's the first one. The second stock is Ganesha Eco. Small stock under pressure in today's trade. Even in that stock, there was a large block, nearly 3.5% equity got changed hands. Again, looks to me like a clean out trade from a private equity guy. I don't have clarity on the buyers, but from a seller point of view, looks like it's a clean out trade in Ganesha Eco as well. So that's the second one. The third stock is NTPC, marginally under pressure today, but broadly the feedback is there is buying interest back in that particular stock. A good amount of volumes as well, and some long only funds seems to be active buyer in NTPC. Power as a space has done well in the last many days. And the last stock is VIP Industries. Quietly, even after disappointing numbers, that stock is quietly up. Again, in today's trade, it's a 5% on good volumes as well. The flows at the HNI desk are quite active, but there is also an anticipation of some large corporate development in VIP very soon.
Okay, well, interesting list as always. Nimesh, thanks very much for that. Mitesh is back with us to tell us what to buy or sell now for a reverse trade when we come back tomorrow. Mitesh, what do you have?
Both the names are from the IT side. I think that's clearly one sector, which is giving you a lot of comfort to trade on the long side. And apart from pharma, so I think I picked up Tech Mahindra as a BTST with a stop at about 1194 for targets of 1222. Wipro is the other name. It's also closing at the day's high. So BTST here with a stop at 414 kinds of levels, and look for a target of roughly around 421.22 here as well.
Got that. By the way, we're getting some important clarification coming in from AU Small Finance Bank. Our team has written to them and they have responded to any kind of queries with regard to some market rumors. So we should get that up for you on the screen, that they're saying that there are no raids or any reported employee-related frauds. So that's the first line that's coming up. And messages circulating on social media, a case of rumors by vested interests. So just because there was some kind of buzz, our team has written to them, and this is the clarification that they have brought out. Just take a look at the stock. It's seen a bit of a recovery from the day's low, but it's still down close to around 1.5%. Well, moving on then, I think 2 years after the government initiated the bad bank, or the National Asset Reconstruction Company was formed to take over bad loans of banks, the track record doesn't look great. Well, the government has set a target of around 2 lakh crore worth of NPAs to be acquired by NARCL as of FY22 end. Well, till date, not even 10% of the target has been met. Sapna is tracking that story. She joins us to fill us in with more details on that front. Sapna?
Well, NARCL's track record is not looking very bright, so to speak, as per data that has been shared with us from sources. In the last 2 years since the inception of NARCL, it has acquired NPAs worth somewhere just slightly over 18,000 crores. And this is against a government target that had been set out for 2 lakh crores worth of NPA acquisition, and that too by FY22 end. We are already into FY24, and less than 10% of that target has been achieved in terms of acquisition of NPAs from banks by NARCL. That's one. Second, also in terms of the purchase value of these NPA amounts, the purchase value is just 4,500 crores. And this is regarding 7 odd accounts. 4 have been acquired and 3 have been done via Swiss challenge. There's a massive haircut for banks over here, 4,500 odd crores, against the NPA value of 18,000 crores. This translates into a haircut of 75 odd % for the banks. Probably this haircut is more than what comes up in the IBC. So that also is, I think is already a point of concern for the policymakers and as well for the stakeholders. Also, one more statistic in terms of the government guarantees that have been utilized. Obviously, since the NPA acquisition has been so slow and tardy, the amount spent on government guarantee is not much. So around 3,500 crores worth of government guarantees utilized against a budget outlay of 30,600 odd crores in the last 2 odd years. And these government guarantees are only for 5 years. 2 years have already gone. So we really need to wait and watch and see whether NARCL is able to pull its socks up and kind of expedite the process. There's already pressure from the government, but we'll have to see how this really pans out. Last but not the least, going forward, 33 more NPA accounts are to be acquired by NARCL. Some of them are already under process, and that amount would turn out to be somewhere around 1.71 lakh crore worth of NPAs. So that a major part of the acquisition still remains.
Thank you very much for that. Just one more stock, On Mobile Global. That's locked in an upper circuit of 20% right now. And this is after the company reported the Q1 numbers. And quarter on quarter, there is an improvement. Revenues are up 7% quarter on quarter. Margins have expanded from 1.5% to 8%. And the company has clocked in a profit of about 10 crore versus a loss in Q4. So sequentially, there is a pickup and the stock is now up 20%. Though it's still off about 35-40% from its 52-week highs. Get into a break. On the other side, we'll be joined by Jay Bala of cashthechaos.com. Stay tuned.
Welcome back. Here with us on Closing Bell, and we have just under 10 minutes to go before the day closes out. Jay Bala of Cash the Chaos is with us. Jay, good to have you on the show as always. So it's not giving us a clear directional sort of clue, the Nifty at least. Bank Nifty has been a bit perplexing. I mean, today it's been showing strength. Otherwise, it was a lot of underperformance. What do you make of things? Let's talk about the big indices first, Nifty and Bank Nifty. What does the setup look like to you?
Yeah, thanks for having me on the show. So we see the Nifty I think, is setting up for a risk-off phase. I think it's a global setup, but as the indecision goes, most of the indices that I track haven't broken below critical supports, but they are signaling a possible turn. So you have to take cues from the cross assets and the dollar index, which we've been discussing for the last couple of weeks. That's signaling a possible phase of risk off. But as I said earlier, none of the critical supports have been broken. So, we need to be a little bit patient. I see this as a short-term risk of potential. But, we have to decide based on what the market does going forward. But at the moment, it's better to wait for what the markets do. For the Nifty as such, the bull-bear divide is about 19,795. As long as the index stays below 19,795, I'd expect this to drop to the 2022 range, somewhere close to 18,887. But as I said again, I have to re-insist that no critical supports have been broken, and we had an intraday break below 19,300. I think that's going to be a close below that. We'll see a close below that. The Nifty Bank has been weaker than the Nifty as such, and that as such is the reason for the market's weakness. When the Nifty went up 4%, the Bank Nifty went up only 2%. So the more important event has been from the Indian 10-year yields. I'm projecting fresh 52-week highs for the Indian 10-year yields. That will have a crack on the bond holdings of the PSU banks. So I expect a pullback for the Nifty, Indian 10-year yields to somewhere close to 708 to 705, and then start a move towards a fresh 52-week high.
Okay, hi Jay, good afternoon. Jay, what about the pharma index? We have almost on a day-to-day basis, we're getting one beat after the other from the pharma space, and that's been the relatively quiet space. What's your view on the index first, on the pharma index, and if you have any stocks that you're tracking out there?
Yeah, very, very strong potential for the Nifty Pharma Index. But from a bullish perspective, it's still a bit stretched in the short term. A short-term pullback would do the index and the stocks within it a lot of good. Let's say a pullback somewhere close to 15,000 or 14,600 would bring in dip buyers for the index. Supply is the strongest there. Tracking markets for so many years, generally it's the Biocon which moves last in the bullish phase. So that's a bit of a put-off for me. Biocon is looking bullish, but it generally tends to be the laggard and tends to move last. So these two are important stocks within the pharma space.
Sorry, so okay, so you're saying that this could be, the pharma space also perhaps could be nearing something, nearing an end to this up move, at least for the time being. That's what you're saying or hinting at?
No, pharma sector as such, I think has got more higher highs to come through. But generally, Biocon is a laggard. It generally tends to move in the last phase of the bullish phase. So that's the negative for the market. But pharma is set to make further higher highs, probably close to 16,000 and 16,500. The setup is quite bullish. 15,000 to 14,600, very strong support. That'll be a bullish pullback for the sector.
I remember last time you had said the dollar index is headed to 110. Do you still maintain that? And what's the global setup looking?
Yeah, the dollar index is looking like it will move at least to 109, 110. That's the key point. I have a thesis that it's going much higher and it's going to surprise a lot of people over the next 12 months to 18 months. The crack probably is going to appear from the European equities. If you recall, we had discussed Deutsche Bank and Commerzbank back in March, and after that, in 3 days, Deutsche Bank fell 20%. Although I said it's not a short-term setup. If you look at the stocks 50 of the European indices, that's looking like it's made a turn, and 4,200 is a very critical support for the stocks 50 index. And once that breaks, that will signal a risk-off phase. So watch the dollar index as well as the Stocks 50 index in the European markets.
All right, Jay, give us a couple of stocks, that you would like to talk about from the broader markets in particular.
Yeah, I like a couple of stocks within the mid cap and small cap space. Even though the Nifty could pull back, the market would consider that as a bullish retracement, and the punters would be active within the mid cap and small cap space. That's my anticipation. So Bayer crop science within the space is looking interesting here. It could either pause at 5,200 and then turn back. But if they were to take out 5,200, 5,250 range, I think it's headed for very exciting times, probably somewhere close to 8,800. So, but the decision point is about 5,200, 5,300. So keep a stop at about 4,300 and look for what the market does around 5,200 mark. And there's a very interesting small cap stock, which is Shivam Autotech. And that again, it's been around the markets for a long time, since 2009 or slightly even longer than that. It's looking like it'll at least push towards 50 from current levels of about 28, 29. So a stop under 23 would make sense, but it's an absolute essential to keep a stop because it's a small cap, and it even has potential to scale fresh all-time highs of 100. But watch out, small caps are quite volatile. Stops and trailing stops are absolutely essential.
Okay, thank you very much for joining in. Just a few minutes left for markets to close, and it's going to be a close below 19,600. A shade in the red for the benchmark indices, currently down close to about 0.1-0.2%, but it's been a very quiet day. The index has moved in just about 100-point range, and it's facing resistance at that 20-day moving average, which is around 19,640. Banks did well. Today was the weekly expiry for the Fin Nifty. So the Nifty Bank was higher, outperforming with a gain of 0.3%, and even the Fin Nifty, that index, was up and about in trade. The gainers include Hero MotoCorp after the new offering. Harley Davidson sees 25,000 plus bookings. SBI Life, good session. In the pharma pack, Cipla took the top honors. IT names like Tech Mahindra, Wipro saw buying. On the losing side, Adani Enterprises, Power Grid, Hindalco post the numbers, slipped close to about 2%, and M&M, Britannia, Sun Pharma on the back foot.
Okay, that's the way the large cap screen has shaped up. Mid caps, the index was doing better than the Nifty throughout the session. If we talk about some of the big movers and shakers on the upside, of course, Gland has been the big headline of the day, 20% circuit. It started with circuit, stayed on circuit throughout. And then a couple of other names from the financial space. Bank of Maharashtra, 7%. J&K Bank, about 5.5%. Equitas Small Finance Bank, 5%. Mannapuram, Union Bank. Even Punjab and Sindh Bank, which came out with weak numbers yesterday and was down and out. Today, there was a day of recovery. So pretty interesting moves on a lot of the smaller financial stocks. Beyond that, Imami had a great session, about 7% up on Imami. Result reaction coming in. Cera, Sanitary, and Zen Technology and RateGain were some of the stocks, along with ITD Cementation, where numbers have been really bringing about a big buzz and big gains on all of these. But overall, I guess the hallmark, Prashant, remains that today is one day when we can say, I don't know after how long, that the Bank Nifty has outperformed the Nifty. I don't know when I said that last. It's been that kind of a session. Oh, absolutely. You're right, Surabhi. Broader markets, advanced decline, by the way, I just checked, is there are more stocks down than up. But it's a very, very long list, and you guys covered a fair bit of it about stocks which went up on lots of volumes and really long listed names. I mean, some names, look at something like a Talbros Auto, 14-15% move, Suntech Realty, Satin Credit Care, Sangvi Movers, Skipper Industries, Genus Power, Inox Wind. We're talking 8, 10, 12% moves. On Angel One, for example, I think shot up, especially in the last 60 minutes. It was a strong, so really a very, very buzzing kind of day in the broader market once again. Well, I think that brings us to a close. That's the closing bell as well. Not very much on the Nifty, but very, very stock-specific action. From all of us here, thanks for staying with us. But don't go anywhere. Our Tuesday special, Commodity Champions, will take up all the action in just a bit.